QuickBooks versus FreshBooks. Which one is right for you? If you've been wondering that, or you know it's time to switch, but you're a little bit nervous about what it's going to take to actually make the move, then you're in the right place. In this video, I'll walk you through the 5 easy steps to move your data, set up your account, and get started with FreshBooks fast. Hi everyone, I'm Jamie Trull, your favorite CPA and financial literacy coach, and I love making videos on this channel that help you navigate the tools you need to be successful with your business finances. So full disclosure, I've been a QuickBooks user for years and I've made lots of videos about QuickBooks on this channel. However, last year I was asked over and over again for alternatives to QuickBooks, and that led me down the road to be looking into solutions like FreshBooks. And what I found in this research is that if you are a service-based business, a solopreneur, a freelancer, a lot of people actually prefer FreshBooks for the simplicity to something like QuickBooks. And the great thing is it's a platform that really focuses on that simplicity, and it focuses on things like invoicing capabilities and tracking that you need as a service-based professional. But I know for a lot of people, the actual step-by-step of making the move is what stops them in their tracks. So that's what we're going to walk through here today. So let's get started with step 1 of the process, which is making sure that FreshBooks is the right solution for you. So if you're someone who feels like QuickBooks is just way too complicated for you, then FreshBooks is a great option for its simplicity and for its affordability. So in order to make this decision on whether FreshBooks is right for you, definitely start by taking an audit of what you really need in an accounting software. So take a look at what you're using, what reports do you need, what types of bells and whistles do you have to have, and does FreshBooks have that functionality? Now, if you're currently using QuickBooks Self-Employed or QuickBooks Solopreneur, then FreshBooks is likely a really great option for you. I think it's an improvement over those platforms. So now, once you've decided that FreshBooks is the right platform for you, the second step is to export your data out of your current system. Now, a word to the wise here, you're going to want to make sure that you have closed out the year prior in that system. So oftentimes, if you are planning to make a move, but your books are a mess, we don't want to bring in books that are a mess into a new system because they're just going to still be a mess. It's not going to fix anything. So definitely make sure you've closed out the year, you've reconciled your accounts, and you've finalized your previous year's statements. Once you've done that, it's a great time to export that data. Keep that handy, and I'm going to show you what we're going to do with it when we get into FreshBooks. So now it's time to go into QuickBooks Online and pull down the reports that we need. And we're going to go ahead and pull down reports that we need for the transition, but also just any reports we want to keep and have on file. So we're going to start by going up to settings, and you can see that there is an export data under tools. And you can see here that it's got a bunch of reports listed, so you can go ahead and download all of these. I typically recommend downloading them through the end of the year prior, so you can put that as the end date. And again, hopefully you've already gone through and reconciled and finalized those accounts. And then you can pull all of those files for your own records. And importantly, this is what it looks like in QuickBooks Online, but there's going to be a similar export feature no matter what platform you are currently using. And then you're going to go ahead and export that to Excel. You're going to get a zip file that you can save onto your desktop. And then you've got those forms saved. So remember, just save that somewhere you're not going to forget where it is. And then you can go back in. There's some additional things that you may want to also save, and that's under that lists tab. So we just did the reports. Now we're going to go to lists, and you can export customers, employees, and vendors. If those are even fields you use, you might as well just go ahead and save them, even if you're not sure. And then the next thing that we're going to do is go to reports, because that is probably not all the things that we're going to want or need for our records. And I highly recommend just scrolling down through all these reports and thinking about which ones would be helpful for you to have. So it's got all your standard reports, right? Like your profit and loss and your balance sheet, but it also has additional reports that might be really useful to you in the future. So again, feel free to pull down and save as many of these reports as you think would be helpful. So now that you've gotten all of your data downloaded from your previous systems, It is time to set up your FreshBooks account. So I'm going to walk you through that step by step. It's super easy and quick, so let's get started. So now it's time to go sign up for our FreshBooks account. As always, I have special partner deals. They do change, so if you don't see what's on the screen right now, that's okay. It's still going to be a better deal than what you'll get on the FreshBooks website. So definitely go to jamietrull.com/FreshBooks to get the best deal. And then what you're going to do is press the button to sign up. Now, again, you're going to want to confirm when you get to this page that you're signing up for the right deal that was on the previous page before, and then you're going to put in your information and set up your password. So when you're going through the process of setting up your account, it's probably going to ask you some questions that you can just answer about yourself and your business. That's to make sure that it's customizing what the features are that it has in here for your specific business. So definitely make sure that you complete those as best you can. It's not going to affect much, but you could have some different default settings based on how you answer those questions. Now, once you've set up your account, which is super easy peasy, then you are going to get to the big part of this tutorial, which is bringing your data in and getting everything set up in FreshBooks. And this is probably the most intimidating piece of this, which is why I'm going to walk you through it step by step. Now, there are a couple of different directions you could go when you are making this move. So one option is to use something called MMC Convert that partners with FreshBooks, and then you can bring over a lot more historical data that way. However, it is a bit of a process to do, and it's going to take a little bit longer if you do it that way. However, it will give you access to more of that historical data. Now, personally, I am a fan of the second way, even though it sounds more complicated because it's the manual way of bringing your data in. I find that it's actually a little bit more straightforward and you can get up and running faster. Now, I will say as a CPA that my biggest goal when I'm switching systems, the thing that I'm watching out for the most, is making sure that I don't accidentally muck up my accounting records by moving from one system to another. So that is why I think sometimes doing the manual way might be easier, because really you can start with your ending balances from the year before. So remember I talked about if you have closed out your books in another software the previous year and you're moving into a new software that you're going to start utilizing as of transactions happening from January 1st onward, then that is an option to just bring over those ending balances. And so that means looking at your last year's P&L, bringing those over, and then also, even more importantly, your starting balance sheet numbers. Okay. And so as long as you're starting from the right place from a balance sheet perspective, then that's going to make things a whole heck of a lot easier for you. And you're going to make sure you don't run into accounting issues and muck up your taxes and your books. Now, I also know that the accounting records aren't the only thing that we use accounting softwares for. So you may be using the accounting software for invoicing, let's say, or proposals. And that's a little bit tougher to be able to get any kind of customizations that you've made in a previous system, or to go back and bring in those old proposals and old invoices into the new system. There is more complexity there. And if you need all of that, you might want to go more towards the MMC Convert way. However, some of those things are actually additional cost. So a base conversion where you're looking at your accounting records and things like that is going to be free. However, there are some additional add-ons if you need to have that level of detail moving from one system to another. So for example, if you're using MMC Convert, things like proposals and time tracking are not going to be able to be converted without an additional cost. Now, another reason I love the idea of starting fresh and just bringing in those beginning balances is that it allows you to reimagine your accounting software and how you want to use it. Sometimes the reason we're moving from one software to another is that things got a little complicated, a little messy in the old system. So why not use this as an opportunity to clean things up a bit? Maybe it's time to change your chart of accounts and make it a little simpler, right? Maybe it is time to really think about what you absolutely need in your accounting system and how you want to look at things. That's one of the great things about starting in a new system is it really allows you to reimagine what you want to see and to create that from the starting point. So with all that, you're going to want to pick one of those two tracks, and the rest of this video, I'm going to show you how to do it the manual way. Now, if you're interested in the MMC convert way, where there's a full conversion happening, then I'm going to be doing a video on that in a couple of weeks with one of the experts from FreshBooks, who's going to be here to walk through it with us and give you an understanding of that process. So make sure to subscribe so you don't miss that video. So when you're in your new FreshBooks account, you're going to go to accounting over here. And the first thing that we're going to do to start setting things up is go to add bank account. So you can just upload a CSV file if you want to import everything manually. Most bank accounts will allow you to download a CSV file. But of course, this is, 2025, so most of us probably would prefer to just connect directly to the bank, and that will continue. You can bring in past transactions, and then you can also bring in transactions automatically over time. Now, you'll notice there are lots of banks noted here, but it also, if your bank isn't one of these, then there's plenty of other financial institutions to choose from. So pretty much any bank that you can log into online, you should be able to find in FreshBooks. So I'm going to go ahead and try to find my bank. Y'all know that I use Relay, and there it is, ready for me to click on. So when I click on that, it's going to take me to log into my Relay account, which I will do off screen because y'all don't need to see my password, and then I'll be back. So when I did that and connected to my account after trying a few different passwords, because of course I forgot, I got to the point where it asked me which accounts I wanted to link. So I got to pick the ones that I wanted to link that were related to this business entity that I have. And it is going to ask me how far back I would like to go. And pretty much in all cases, right? Especially because the hope is that we've got to start at a point in time. We don't want to bring back all of our transactions because that's going to get unwieldy, and everything we bring in, we're going to have to categorize. So if we already categorize that in another system, why would we bring these into this system and have to do double work? So what you likely want to do is figure out what your date is that you are switching over. What is that conversion date? And typically I recommend, it's going to be easiest often, if that date is January 1st. So even if you are doing this later in the year, January 1st can still make sense because you're going to go back to that first day of the year and reconcile all your transactions for the current year in this new FreshBooks software. So I highly recommend going to custom, and then you can pick a date. So like I said, again, assuming that you have closed out your books in another system as of the end of December 31st of the year before, then we are going to hit January 1st. So we only want the transactions that happen January 1st and forward so that we don't have to do double work. And voila, it is already connected. So we can go and look and check everything out. So we can also see, depending on the type of plan you have, I highly recommend getting one of the plans that has the bank reconciliations. That is really key to me to be able to make sure your books are accurate. From a CPA's perspective, bank reconciliations are just really, really important. But either way, you can capture and categorize all of your expenses no matter which plan you are on. And so now on my bank connections page, I can see that I have 3 Relay financial accounts connected. And when I open this, I can actually see which ones they are and validate that they are the correct ones. And you can also refresh. It's going to automatically refresh for you occasionally. So it'll tell you the last time it refreshed. But if you ever need to refresh it for any reason, because you're going in to do some categorization of expenses, you can hit that refresh. So now I've come back to that accounting tab. And here you can see now it's showing my banks, and it is asking me for my opening balance. So this is exactly what I was hoping to see here because the question I had is, okay, well, if we can go back to January 1st, that's great, but how is it going to know what my actual cash balance is if it doesn't know the starting balance as of that January 1st date? So this is where you can add that starting balance. So this would essentially be your bank balance as of the end of the day on December 31st if you used a January 1st date as your conversion date. So I can really easily just hit set your opening balance, And then I'm going to choose a start day for reconciling this account. Use the first day of a bank account statement. So here is where you're going to go ahead and put in that date. So it says to use the first day of the statement. So that's going to be January 1st for me of 2025. Because I'm going to go back to that date. Now, this is an interesting note. It says your bank account may not be able to import transactions as far back as your reconciliation start date. So, like I said, we had gone back and it looked like it had the ability to go back 365 days. But again, it really depends on the bank. So the bank may not be able to go that far back. So you just have to look and see whether or not your bank was able to pull in all those transactions. If they were not, let's say maybe you could only get 60 days, but you actually needed, 80 days, you can actually upload a CSV file with the rest of those transactions. So the earlier, the closer to the beginning of the year that you do this, the easier it's going to be because most of the banks are going to be able to automatically bring everything in. But if you're trying to go back months and months, or even more than a year, then you may have to do some of it the manual way using a CSV file. So then you're going to confirm the opening balance as of January 1st, and that's the beginning of the day on January 1st. Remember, because we're bringing transactions back into January 1st, so we don't want to accidentally double count something. So really you can look at your December 31st ending balance. That's probably going to be the easiest way to find it. And that is what you're going to put in here. So now once you've done that and you're back on the accounting page, you should see under bank reconciliation that it is now connected, and assuming there are transactions that you imported or that have happened since your conversion date, then that should show up here. So that is where you're going to go ahead and you can start matching transactions. And the goal is that then your bank account balance and your FreshBooks balance agree. So once that happens, then you should be good to go and your cash balances have been updated. Now, you can do the exact same thing when it comes to your credit cards. So this is the same thing that you'll do when you bring in credit card transactions. You're going to add them just like you would as a bank account. So you can press add bank account, connect to bank, but this time you're going to look for your credit card. And when you do that, you're going to bring in your credit card statements back to that conversion date, and that's going to make things much simpler as well. So then after connecting that credit card, I came back here to my bank reconciliation, and it does show that it is here. If you don't see this, you might have to log out, log back in, or just wait for all your transactions to come through, but it can take a minute. So once you go there, you're going to do the same thing that you did before. Now, one thing to keep in mind when you're putting this in here is it may not match exactly to your statement date. So oftentimes statement dates for credit cards are not the exact end of the month. So you might have to do a little bit of math to figure out what your balance would have been on the beginning of the day on January 1st. So one other good way to do that is just to look at your ending balance sheet in QuickBooks and pull that number, because assuming you've reconciled that, that should agree to your credit card balance as of the beginning of the day on January 1st. So now it's going to bring me to this where it shows the different matches for these transactions, and it's basically going to guess at what they are. So it's going to guess that my Shopify is office expenses. That's correct. It's going to guess that Southwest is an airfare. That's correct. But now down here, it did get one wrong, and it can do that sometimes. It takes a little while to learn. So if on that earlier screen you do see any that actually are not correct, then I probably wouldn't match those. I would uncheck the boxes, and then they'll show up on this screen. So the other thing is we have not customized our chart of accounts yet. So if you wanted this to be something other than what popped up, maybe I actually prefer to have a membership software account, right? There's a quick and easy way. You can create it right from this menu, and you can decide if it's an operating expense or cost of goods sold. That's really more for product-based businesses. And then you can decide where you want to group it. So what type of expense is it? For me, it's probably an office expense and postage, but we're going to put it underneath a special account because I want to be able to track that separately. And then you want to press save and it will change that. So you can customize your chart of accounts from here. I'm going to show you a different way to do it as well. Now you do have to have advanced accounting on, I believe, to be able to make those changes. So if you haven't turned that on, that's something you'll need to turn on in order to be able to customize that chart of accounts. And so now I'll go ahead and match it because it's categorized the way that I want it to. And there we have it. So one of the things that you'll want to do if you have a bank and a credit card and say you're paying your credit card balance with your bank account and you don't want to record that accidentally as an expense. So if I just went here and matched this, it's going to put it to uncategorized expenses, but this is really just a transfer from one account to another, so it should not show up anywhere on my P&L. So what that means is we are going to come up here to mark as, and in these cases, these are the couple of cases where you may want to pick something different that this gets recorded to. So typically, if you're coming here to check on your different categories, these are going to be your expense categories down here. But if you need to be able to record this as something else, then you can come in here and you can select what you want to do. So if you're paying yourself as an owner draw, that's going to go to owner's equity. Again, we don't want that showing up as an expense on our P&L because that can mess things up for taxes. And if we're transferring between two and they should cancel out, then we want to hit transfer. So in this case, you can give it a note, and I just said credit card payment, and now I can hit submit. And there we go. That's all we needed to do. Now, in this case, this was actually a contribution from me personally into the business. And so in this case, we're going to go ahead and we can mark this as something. And in this case, we're going to say, it says money you withdrew from or paid into your business. So we're going to call this owner's equity, and we'll just say capital contribution from owner. And then we'll click submit. And the great thing is we can look up here and we see that our bank account balance matches our FreshBooks balance. And it's a good thing also to go check our actual bank account balance and check the statement and make sure that that is also agreeing. But assuming it is, then everything is in there and it should be correct on your balance sheet. So you might be wondering what else you need to do in here to get those opening balances correct. So we've gone ahead and we've put in our bank balances, we put in our credit card balances, and so we should have those correct as of our opening balance date. But what else do we need to make sure is in there? And that really depends on whether you have anything else on your balance sheet. So this is where you can look back to those reports you took out of QuickBooks or those end of year reports from your previous system and see what your balance sheet looked like. And the key there is that if you have any other asset or liability accounts that aren't captured here, then we're going to need to do a journal entry to add them. So what I recommend you do is to go ahead and pull down that balance sheet and take a look at what accounts you need. So let's say in this case, I needed to have a fixed asset account and a loan payable account. So we're first going to go over to the chart of accounts. So that's actually something you have to have advanced accounting on for. So if we click on this, it's going to tell us a little bit more about that. And it's going to give us a little bit of a warning. And I completely understand why, because it wants to make sure you don't accidentally make changes that you don't mean to make. But if you are wanting to manage your chart of accounts, if you even want to add or change your chart of accounts and the accounts that show up on your profit and loss or balance sheet, then this is something that you're going to have turned on. So I'm going to go ahead and turn this on, and it tells me that it is turned on. And then we are going to go over to our chart of accounts here, and we're going to want to make sure we have the accounts that are going to work for that. So I'm going to go to asset and make sure that I have all the asset accounts that I need. In this case, I'm going to look down and there is a property, plant, and equipment. I'm going to use that for my fixed assets. And I can get more specific if I want to around what it is. And then I also have a loan that I want to check and see if there is an account for. So in this case, I don't actually see a specific account for loans. So I'm going to go ahead and create one. So in this case, it's a liability because it's something that I owe. It's a long-term liability because it is over 12 months is when this is due. And I'm going to call it loan payable. And I can put in here, maybe the bank that I got it from or the due date, whatever you want in the description, and it's going to assign an account number. You can change that if you want to, and we're going to go ahead and add account. And once we have that created, and there it is right here, then we can go to our journal entries tab. And I know this sounds scary because we're talking about making journal entries, but I promise it's really not as bad as it seems. And so over here, we're going to go to create journal entry. And this is how we can get the rest of those balance sheet accounts on here. So in this case, we're going to go back again and say our beginning balance date. We can say opening balance journal entry. We can put a description for what it is. And then we can come in here and we're going to select accounts and debits and credits. I know that that might scare you away, but we're going to pull up one of the reports that I told you about to save from QuickBooks, and that's our trial balance report. And we're going to put those side by side, which is going to tell us the debits and the credits. So here we are, I've pulled up that trial balance. I've gotten rid of all of the income and expense accounts because those are related to the profit and loss, but we really just want to look at the balance sheet accounts. So this should agree to your balance sheet that you ran as of the prior year. You can check and see, but the nice thing about this that we don't necessarily see this way on the balance sheet is this tells us the debits and credits. So ultimately what we're going to do is enter this in as the balance sheet, but we know which column each thing goes into. So we're going to go ahead and we are going to find that property, plant, and equipment account. And we are going to add this $7,500 fixed asset. Oop. And that is a debit for an asset. Now you might be wondering, why did I skip these? Because we have already put these in and entered our opening balances. So I'm going to go ahead and do in green everything I've already included in the steps before this. And now we've added fixed assets, and we're also going to come down here to loan payable, which we have an account for now. There it is. And we're going to add that, which in this case is 25. Oop, actually I put it in the wrong place. Look at me go. So it's actually going to be a credit of 25,000. So it happens to the best of us, even us accountants. Now, what you're going to see here is it is not going to balance. So if I tried to press save, it is okay. Good. I was testing it. I'm glad it did not let me post a non-balancing journal entry. So that's the key with accounting. Of course, things have to balance. That is, we are very, very specific and a little bit anal about that. So what we're going to have to do is add a line. And in this case, we've gotten all the assets and the liability accounts. All of these are equity accounts. And for equity accounts, depending on your entity type and things like that, in most cases, it doesn't matter so much how you have things categorized down here. I would talk to an accountant if you are confused about what to do with this, but ultimately you're going to want to put the difference to equity. So let's scroll down and let's see what account we have. So the 3,000 accounts, these are the equity accounts. And I love this one. It's an opening balance account, and specifically an opening balance adjustments account. That sounds perfect. That's exactly what we're doing here. And so in this case, right, we need this to be able to balance. So we've got a $25,000 credit and a $7,500 debit, which, if my mental math skills are working, means that we need a $17,500 debit in order to balance this transaction out. And that's going to go to opening balance adjustments. So let's go ahead and put that $17,500. Yay, and now everything is working, and I betcha it's going to let me save. And there we go. We have now entered all of our balance sheet transactions, so our opening balances should be in good shape. And if you're wondering if that's all you need to do, it really depends on what else you're using. So for example, you might want to go in, if you have especially outstanding invoices, you might want to go into your invoices and create invoices here that you can utilize. So that might be something that might be the next step for you, or potentially going through payments. But ultimately, you're going to be in good shape from an accounting and tax perspective if you've brought over all of those opening balances. Now, once you have done all of that, it's time for step 5, which is to check through everything. You want to do final checks, making sure that everything has come in correctly, because you don't want to figure out that something got mucked up down the line. We want to figure that out and solve for it right now. So to make that part easy, I'll show you some of the key things I think you should take a look at, especially from an accounting record standpoint, that you're going to want to make sure are coming through correctly. So to do our checks on that opening balance and our accounting records, we are going to go over to reports. And we're going to scroll down to find one of our favorite reports, the balance sheet, which is under accounting reports. And then we're going to filter it for that first day of the year. And you can do it billed or collected. Again, look at whatever you're using and you're comparing to, you're going to be taking a look at. And that is what I see here. So now I've got my assets and liabilities as of that time frame. Now, what do we want to do with this? We want to compare this to our ending balance sheet that is from our previous system. So in this case, if you're moving from QuickBooks to FreshBooks, that would be from QuickBooks. So you can pull up your QuickBooks balance sheet, and you can see here, I just went ahead and pulled up the trial balance that I was just using because I already had it up. And I'm going to look through and just make sure everything looks correct. So I see my cash balance is correct. My fixed asset balance is correct, which means my total balance for assets will be correct. I'm going to come down here. My credit card was 0. My loan payable was $25,000. And then it's going to show these as opening balance adjustments. So again, it may not show these separately unless you actually put them into journal entries, but that's generally going to be okay, especially if you're not a corporation. These split between equity is somewhat less important. The key is just that it all balances out. So if everything looks good there, then you should be good to go and know that your accountant will be very happy with you that even in switching systems, you were able to maintain a balance sheet that's still tied out. Now, of course, accounting data isn't the only information that you likely want to have in here carrying over from QuickBooks. So there are some other ways to make sure that you're pulling everything in. So for example, if you want to pull in your client list, you can go to More Actions, Import Clients, and it's going to walk you through how to be able to upload that to import your clients. And the same thing is going to happen when it comes to vendors. You can go to Vendors, More Actions, Import Vendors, and essentially you're going to use a CSV file that's formatted the way they want to. There's a help article that tells you how it needs to be formatted. And then you can just go ahead and import that so that you're not losing all of that valuable information. And the other thing you can import is down here, this items and services. So if you have a list of different things that you sell, then you can import items here as well. So again, that's going to be a CSV file. There's some great FAQs on this to help you. But again, you don't have to completely start from scratch on all this. You can go ahead and pull in the things that you need to. And the other thing that you can do as well here is spend some time customizing your chart of accounts if you need it. So again, we didn't pull in the profit and loss because we didn't need to for our beginning balances. But if you're going to want to make sure that you have all the accounts that you need, then you can come into the chart of accounts. Again, you have to have advanced accounting turned on to see this, and you can go in and you can add any additional accounts that you want. So if you want to be more specific, again, don't get too crazy. You don't need to have an account for every single type of revenue and every single type of expense. But if there are things that are helpful for you to see, you can add them really quickly in the chart of accounts and just make sure that you're putting them to the right subtype. That is really, really important in here, right? If something is an expense, we don't want to mark it as equity. We want to call it an operating expense. So just be really mindful of making sure you understand what account type it needs to be. And if you aren't sure, you can look back at those reports that you got out of QuickBooks because they will give you more information as to what type of account that should be. So there you have it. That really wasn't so bad. We just got you fully set up on FreshBooks and ready to use it going forward as your accounting software. Now, the great news is you can go ahead and cancel that old QuickBooks account. And thankfully, you're still going to get a year to be able to log in on read-only mode and pull down some of the reports and things like that that you might need for your business historically. So it's okay that you don't have every single detailed record because you're going to still have access to that information to be able to pull it down and research it if you need to. Now, just because we got all the accounting in there, it doesn't mean that you're fully done. You may want to go in and customize other things like invoicing and project project tracking. So that's definitely something to do as a next step. But at least we have all the accounting information you need both for taxes and for monitoring your own business performance and profitability ready to go and loaded into the system. So if you're ready to go ahead and sign up for that FreshBooks account, definitely make sure to use my partner link below to get a great discount, jamietrull.com/FreshBooks. And if you're still not sure if FreshBooks is right for you, but you really are looking to make the switch this year, then definitely go check out this video that's on screen now, talking more specifically about QuickBooks alternatives, including FreshBooks. Thanks for being here. If you want more FreshBooks content, make sure to hit the like button and subscribe to this channel, and I'll see you next time.